Hi, it's Mark Cooper-Smith. And in my ongoing series of conversations with entrepreneurs, innovators, funders, and others who are making great change happen in the world, it's a real pleasure for me, an extreme pleasure, to welcome to my series of conversations, David Sher. David, well, first of all, hi, David. Thanks for joining.
Hi, thanks for having me.
So David is a founder and co-CEO of Greenbacker Capital. And Greenbacker is particularly interesting for a number of reasons. Well, Dave, you've been doing this for more than 10 years. I was about to start to provide an explanation, but who better to provide the explanation than you? Tell us a little bit about Greenbacker Capital, David.
So Greenbacker is really set up to take advantage of the opportunity to build solar and wind farms across North America. So what we do is we create investment funds, raise capital from ordinary individual investors, and then invest that money in renewable energy facilities, solar, wind farms. We also do energy efficiency, and we have some other kind of businesses that invest in even startup businesses and technology.
Perfect. So one of the things that I was really looking forward to this conversation around is the theme that people who know me will find me coming back to again and again. And not only do I teach and talk about entrepreneurship and innovation, but also social entrepreneurship. And I think you straddle a number of these areas. I always try and find these opportunities to do well. There's nothing the matter with making a little bit of money, but to do so in a way where you can give back to the environment, to society, to social causes, to education, whatever that may be. This whole area of ESG, which is a category that I think you fall into. And when we say ESG, what do we mean by that? And share a little bit about if you will, about your thinking in Genesis about the do well while doing good, or doing good while doing well.
Great. So throughout my career, I've been in the financial services industry, and the financial services industry has a reputation for being all about making money. I did that for many years. I've done really a lot of different things in the industry, from funds management to running a technology business that created trading software, and even ran a hedge fund for a number of years. So I've been in the money making side of the business, and over my career, it was funny. My son never knew what I did, never cared about it. It was always, he's one of them. And so I've always wanted to do something that gives back, as well as creating economic opportunity. So I co-founded Greenbacker in 2011, really to create an investment vehicle that can put money into this gigantic need for clean energy, power facilities, more solar and wind farms throughout North America. And to do this, not by going to large, rich investors or public pensions or sovereign wealth funds, but by raising capital from ordinary Americans so that they could be involved in this revolution that's occurring. And
Right. You let people like me help take part, help accelerate our adoption of alternative sources of energy, which I think is fantastic.
Exactly. I mean, I think in order for the revolution to actually occur, there have to be constituencies of people that actually benefit from it,
Yeah.
not just a wealthy group, but really more ordinary people. And you can look at, for example, in the investment world, REITs, real estate investment trusts, which have been around since the 80s, really. And the amount of investment, ordinary investors that own real estate, the REITs, is gigantic. It's now the biggest part of the market. And we'd like to do something similar with what we call sustainable infrastructure. So renewables, energy efficiency, and other technologies that we think can provide services cleaner, cheaper, better for the environment, et cetera.
Yeah, when I teach social entrepreneurship, so I across the spectrum of things I teach, the social entrepreneurs people who always want to make the world better, and there's not always a clear understanding of the financial underpinnings of that. And for me, the essence of this is, look, you may have to raise some money up front to get things started, but where you can create a sustainable financial cycle where cash is generated, where you get a return on your investment, then the moment you start that flywheel spinning, you're actually able to continue to grow and do more good than if you required something that constantly operated at a deficit. And it's, I think, that same principle that I see at play in what you're doing, that once you get that initial investment going, you're able to start to support all sorts of change in these positive sectors.
Yes, and I would say the asset management business is a great area for building a platform that will allow you to do other things. And we're definitely looking at a variety of different sort of new technologies that we can invest in, new strategies where we can create more impact. And the other important element is, while we're doing this, we have a thriving company with employees that are now building their career around this. So you're creating opportunities for people to feed their families, buy a new home, do other things that are valuable to them, as well as the end product of investing in renewables and lowering carbon and creating employment there. So
Okay,
it's a
yeah, there's a number
double
of things.
benefit.
There's a number of things in there. You mentioned people. Tell us about the people. If we say, is everybody that you're talking about a money manager, or do we have people who are out building solar farms or whatever else? How do you think about the impact of the investing that you make? That when I write a check to Greenbacker, you deploy that capital. What happens to the capital?
Yeah, so there's actually many different elements of it. Within our own company, we have people that are involved in sourcing the deals, trying to negotiate the arrangements with developers. And then we have technical people that are involved in operating those facilities. And we have people that account for what's going on. So that's one constituency. And I will say they always push us to do more social engagement. We're doing a lot of things with education and with environmental causes as a company. But then there's also the ripple effect in society. So when we build a solar farm, there's going to be property tax paid in the location. Solar farms tend to be built in either marginal land or in rural areas where there's not a lot of economic activity. And so generating that extra tax revenue for the location is valuable to them. But we also create ongoing jobs. When you build a solar farm, it's going to be around for 30, 40 years. And you have people that are there to operate it and to come and clean it and to do other things to make sure that it's operating in a tip-top fashion, as well as the people that are necessary to construct it. Yeah. So there's just ongoing jobs for many, many years that are associated with these kind of physical plants.
Perfect. So I have kind of a two-part question that comes next, which is, tell us about the underlying. We've talked about the kinds of projects, or at least some of the projects that you like to invest in, but tell us a little bit about the premise from an investment thesis. So let's say I'm an investor in Greenbacker, right? Then what should I expect from a return standpoint? Is this a high volatility venture capital type fund? Is this what kinds of returns should I look at? And then kind of as we move forward, part two is, and what's happening in the sector where you're making these investments in general?
Okay, great. So this is what I would say is a really interesting low risk strategy. And you can compare it in a similar way to real estate. If you buy a building and then you have tenants that rent the parts of the building and you get rental income on a periodic basis, that forms the basis of your return. Even before selling it at a higher price, you're getting cash flow along the way. In our case, we're building solar and wind farms that have long-term contracts to sell their electricity to a variety of what we call counterparties. Right. Some of them are utilities, some of them are municipalities. We have schools, universities. We also have, for example, the Denver International Airport is one of our customers.
And are these the PPAs we hear about, the power purchase agreements?
Yes, so those are contracts that require the buyer to purchase all of the electricity you generate for a term. And usually the term is anywhere from 15 to 25 years in length. So it's very, very conservative. You know what your cash flows are going to be, assuming you operate the plants at peak efficiency.
Yeah. Well, so you said something that people normally perk their ears up at, and then they go, "Is this really true?" You said low risk. Another thing is our projections are conservative, right? We're all
Yes.
cynical about those things, but you talk about 15-year contracts, as long as you can manage your costs effectively, it probably is reasonable risk. What are some of the surprises that you encounter in either operating these projects or creating them in the first place?
Yeah, so just from a risk perspective, obviously you have the counterparty itself. Even though most of our counterparties are towns, utilities, there's still risks associated with utilities. There was a bankruptcy of a major utility in California.
Yeah, it was my
Uh,
utility. It was PG&E, which supplies
yeah,
me with energy.
PG&E.
Yeah.
So theoretically, they could stop paying their bills.
Right.
We're selling electricity to them. They could say, we can't buy your electricity. Now, in practice, that didn't occur. They continued to pay their bills in
Yeah.
bankruptcy, but that's a theoretical risk. If you have tenants that are not as highly rated, you're dealing with more commercial enterprises or individual residential customers, there's higher risk.
Right.
So what you do to solve that is diversify. So we own many assets in many states with many counterparties, and that's how you kind of solve for the risk.
Mm.
But that's one of the risks. And then the other risk, which we've seen this year in certain areas, there are weather events,
Right.
fires, hurricanes in the East Coast. We've seen. Fortunately, again, our assets were not affected in any major way, but some have been. There have
Do
been
you
solar farms that have burned, et cetera.
Yeah. So do you insure with third parties? Do you self-insure? How do you manage? Because that catastrophic risk could, of course, dramatically impact returns and risks that aside from that seem to be pretty well guardrailed.
Yeah, so that's an important factor. So number one, you would have property and casualty insurance with full replacement value. So you could fully replace whatever the asset that was damaged. But secondarily, what we do and what a lot of the higher end investment managers do is they have business interruption insurance.
Yeah.
So this
So
is insurance that's designed to continue to allow you to get paid for lost production if something is damaged.
exactly. So, and for those of you who are watching this conversation and have spent a lot of time with me, you know that I very much focus from an entrepreneurial standpoint on risk takers and people who are doing it. But I know that as investors, and also wearing my investor hat, we also say, okay, what are the risks? Where can this go sideways? What's David doing to make sure that when I write that check for him, that I don't get a bad surprise? Now, tell us a little bit about the returns, and then perhaps we'll go into what's going on in the sector. How many people are doing what you're doing? But what's the profile of returns? Is it regular? Is there a kind of a big beta on returns? How does that work?
Yeah, so if you think about it, almost everybody out there has to pay a utility bill. So they know that there's a regular payment for electricity, and the same thing works here. When we generate electricity, we sell it under this contract, and we get paid on a monthly basis for the electricity that we sell. Now, just again, like in your own electrical bill, there's different periods of the year when you use more electricity. For example, when your air conditioning is working nonstop, that's obviously very high.
Mhm.
And then there's periods where you don't need the air conditioning and your bill is lower. So there's some seasonal variations, particularly in solar. Wind assets tend to have the opposite. So you have more wind resource when it's cold
Got it.
and
So
during the
you
winter
kind of
months.
build in, if you have a portfolio of properties, you build in when this one's producing, this one's not, generally. All right. Let's move
Exactly.
on a little bit. You didn't start to be in this sector when you started. I mean, you've been in the business of running funds and firms for a while. What was your inspiration to move in to this sector, into alternative energy and water and kind of the infrastructure, the environmental infrastructure that we have in this regard?
So, as an entrepreneur, you're always looking for an opportunity where you're early, but not too early, and where there's a large market opportunity. And, I was working in a firm that it was a middle market investor. So, it would provide loans to middle market companies around the US. And their competitors were tended to be, either other players like that or in the investment class of real estate investment trusts. So these are investments in a variety of different real estate types of investments where they're generating rental income. So there's obviously a huge underinvestment in infrastructure in the US, which is why the US typically gets from the US Army Corps of Engineers a D plus or an F rating for investment in infrastructure. So I thought there would be a real opportunity to invest in sustainable infrastructure, the infrastructure that's going to replace the old coal and nuclear plants
Right.
that are coming offline. So renewables ended up being a really good sector from that perspective. And, frankly, I'm shocked at how fast renewables have gone to be the king of power generation. Years ago, people thought, oh, it's a fad. It's
Right.
very focused on government subsidy and all that. But you can pick up any business journal and it'll talk about how renewable energy is now the cheapest form of power generation without any subsidies.
And these are
So
primarily the ones you invest in, PV or photovoltaic, not necessarily utility scale, concentrated mirrors and all of those types of things. Is that right?
yeah, so it's primarily photovoltaic for
Right.
our portfolio. And
Right.
again, there's nothing against concentrating solar, but I think the advantage of PV is that you end up putting it near where the power is needed.
Right. Well,
Whereas
and
in
in
order to
my,
build it, yeah,
exactly. In my case, it's sitting right
yeah,
on top of my roof, and it's amazing. The payback was 4 years for me on
yeah.
PV, and you look at that, and you just don't expect that. So my personal experiences certainly echo yours from an investment standpoint. How big are you right now from an asset under management standpoint? The size of your fund?
Yeah, so again, we started our business in 2011 and we raised money slowly but surely over the years. And like all asset management businesses where you have a new product that's investing in a new sector, there's kind of a hockey stick effect where you start to accelerate your capital raise. Right now, we're at about $1 billion of investment. And like I tell my team, it takes many years to become an overnight success.
Right, right.
So
So
now
where did
we're
yeah, for you, I mean, all of us was like, wow, a billion, that's with a B, not an M, right? That's a
right.
billion under management. When did you kind of feel that hockey stick? When did you get the kink in the stick?
Yeah, I would say really starting pretty much last year, we started to see a major
Right,
acceleration. And the other thing is you don't get the larger investor groups won't put you on their platform and help raise you capital if you're going to be a large percentage, if they're going to be a large percentage of your vehicle.
right.
They don't want to be more than 10% or 20% of the vehicle. So if they have $50 million to invest, that automatically means you have to be of a certain size to take their check.
So it's kind of
So
like once you get to a certain size, all of a sudden you qualify for those big checks, and then they start to, and then once those checks flow in, then you qualify for more big checks, I presume.
exactly. And that's where the phase of where we hopefully are entering now.
Well, that's exciting, and it sounds like, as with solar energy, and I'm about to make a bad pun, right? The future is bright, as
Absolutely.
which I'm sure you say all the time. All right, um, let's wrap up with. I've just got one or two final questions as we kind of get to the end of our time here, and that is, what comes next? You've kinked that hockey stick. You're growing, you're big. You probably, I presume that you have plenty of projects lined up because the economics continue to improve. Do you keep doing this, or do you take this platform and do you launch more companies, different types of projects? What comes next for Greenbacker?
Yeah, so I think part of the business of investing as an asset manager is finding new places to put capital that are tangential to what you're doing, related in theme. And fortunately, there are very large opportunities. So, for example, battery storage is becoming a new area.
Yeah, I'm seeing a lot of
Batteries are
that
where
too.
solar was, maybe 5, 6 years ago. Batteries are now coming into the low cost solution and just at the right time because the more solar there is, the more you need storage. You need places to store the energy. Wind also,
Mhm.
it's intermittent power, so you need storage elements. So battery storage is an area where we're starting to invest more and more. We also think that there's opportunities in other sustainable infrastructure projects, water related, energy efficiency, retrofitting buildings. So there's really no limit on the type of investments that we would do.
And
We
how
think
do
that
you,
yeah,
yeah,
go
and
ahead.
how do you help promote that? Well, you've got, I think you've got your own incubator, don't you, of sorts? And how does that work? Because I think you're helping really lay the road of the future with, and then of course you get to invest in these guys once they get up and running, and women.
Yeah, exactly. So we have a small business that we started called Greenbacker Labs. And Greenbacker Labs makes investments in companies that develop unique technologies that are related to either renewable energy or energy efficiency. So it might be a software that allows a business to operate more efficiently, or it might be a technology that allows you to use a radiator, a cover that will save heat and recycle the heat and save energy costs. So there's a whole host of these types of businesses. And what they usually run into is they need some partner to help them finance the distribution of their business once they've proven out their model.
Right.
So that kind of fits into what we do with Greenbacker Renewable Energy Company, which is invest in these projects. So we help companies get through the startup, get it to a certain time, and then we think it's potentially something that could fit into our funds.
Right. So then you actually get to put your capital to work in two ways. You both have a stake in those as the incubator or the accelerator. And then when I write a check to Greenbacker, that money can go to work across a portfolio of kind of next generation infrastructure plays. Is that right?
Exactly.
Yeah, very fascinating. If people want to learn a little bit more about this, probably track you down, do a little online research, where would they go? www. What?
Greenbackercapital.com.
Got it. Greenbacker, greenbackercapital.com. David,
Exactly right.
this has been a pleasure. Thank you so much for sharing your story, for sharing some insights into this really growing market.
Thanks very much for having me. I appreciate it.